Well, folks, it seems the trade war drums are beating a little softer today. The tension that had been building up over the past few months appears to be easing, at least for the moment. Remember those hefty tariffs President Trump promised on his first day in office? The ones that had everyone from Wall Street to Main Street holding their breath? The ones that had global markets sweating like a sinner in church? Investors were bracing for impact, fearing a financial storm that could shake the global economy to its core. Yeah, those have been put on hold. For now, it seems there's been a temporary reprieve, a moment of calm in the eye of the storm. Trump, who initially vowed to slap a 10% tariff on all imports, with a whopping 60% on Chinese goods, and a 25% surcharge on our Canadian and Mexican neighbors, seems to be rethinking his strategy. Or at least, delaying the inevitable. This sudden change of heart, or perhaps more accurately change of tactic, has left many wondering, what's the plan, man? Is this a strategic pause, or a sign of a deeper shift in policy? This isn't exactly a complete U-turn. Instead of immediate economic sanctions, Trump has instructed federal agencies to take a good hard look at our trade relationships, particularly with China, Mexico, and Canada. The goal? To sniff out unfair trade practices and, of course, those pesky trade deficits that seem to haunt Trump's every waking moment. This move could be seen as a more calculated approach, aiming to address the root causes of the trade imbalances rather than just the symptoms. By taking this route, the administration hopes to build a stronger case for any future actions, ensuring that any measures taken are both justified and effective. So, while the tariff tornado may have been averted for now, the storm clouds haven't completely disappeared. The world will be watching closely to see what happens next, to sniff out unfair trade practices and, of course, those pesky trade deficits that seem to haunt Trump's every waking moment. The administration's next steps will be crucial in determining the future of international trade relations and the global economy. The news of the tariff delay spread through global markets faster than a bad burrito through a college dorm. Traders, investors, and analysts alike were glued to their screens, watching the numbers change in real time. It was as if the entire financial world had been holding its breath, waiting for a sign of relief. It was like watching a tense hostage situation suddenly resolve itself with everyone enjoying a celebratory pizza party. The atmosphere in trading floors and offices shifted from anxiety to jubilation in a matter of minutes. Currencies around the world, which had been cowering in fear of a Trump-induced trade war, perked up like a dog hearing the treat jar rattle. Financial analysts were quick to point out the immediate positive impact on global trade and investment flows. The Canadian dollar, Mexican peso, and Chinese yuan all got a much-needed boost, rising between 1% and 1.5% against the US dollar. This surge was a welcome change for economies that had been bracing for the worst. The euro, not wanting to be left out of the party, had its biggest one-day rally against the dollar in over a year. European markets were buzzing with optimism, and investors were quick to capitalize on the newfound momentum. It's enough to make you think about booking that European vacation you've been putting off. With the euro gaining strength, travel enthusiasts were already eyeing cheaper flights and better exchange rates. Stock markets, those fickle beasts, also joined in on the good vibes. The sudden shift in sentiment was palpable, with traders riding the wave of positive news. Canadian and European markets, sensing a reprieve from economic Armageddon, rallied with the enthusiasm of a flash mob performing the Macarena. The collective sigh of relief was almost audible as indices climbed higher. It was a sight to behold, folks. The global financial community, for a brief moment, seemed to be in perfect harmony, celebrating the good news together. What's behind this sudden change of tune? Is it a strategic pivot, or just another unpredictable move in the ever-evolving saga of Trump's presidency? Is Trump going soft? Or is there a deeper, more calculated reason behind this apparent shift in stance? Did someone slip a chill pill into his morning Diet Coke? Or perhaps there's a more nuanced explanation that we need to uncover. The answer, as with most things Trump-related, is a bit more complicated than a simple yes or no. It's a tangled web of political maneuvering and strategic calculations. Some experts believe this delay signifies a power struggle within the Trump administration, a battle between different factions vying for influence and control over the president's economic policies. On one hand, you have the hardliners, the economic nationalists, who view tariffs as the only way to bring back American manufacturing jobs and punish those pesky countries who dare to sell us affordable goods. They see tariffs as a tool to reshape the global trade landscape in favor of the United States. On the other hand, you have the more moderate voices, those who understand that a global trade war could have disastrous consequences for the US economy. They warn that aggressive tariffs could lead to retaliation from other countries, harming American businesses and consumers. They advocate for a more cautious approach, one that emphasizes negotiation and diplomacy over economic warfare. They believe in finding common ground and working towards mutually beneficial trade agreements. This delay could be seen as a victory for the moderates, a sign that Trump is willing to at least listen to those who advise caution in the face of potential economic turmoil. It suggests a willingness to consider the broader implications of his actions, or it could simply be a tactical maneuver, a way to buy time and assess the situation before unleashing the full force of his protectionist fury. Only time will tell if this is a genuine shift in policy, or just another twist in the unpredictable narrative of Trump's presidency. Frederic Ducrozet, an economist with Pictet Wealth Management, believes the market is laser-focused on the tariff issue. He sees this delay as a sign that the internal debate within the Trump administration is far from over. There are conflicting views within the administration, between those who are more hardline and those who are more market-friendly, highlighting the tightrope walk Trump seems to be attempting between his campaign promises and the realities of governing a global superpower. Ducrozet emphasizes the importance of details, noting that while the possibility of negotiations is encouraging, the devil will be in the details. We need to see the scope of the reviews, which sectors they will target, he cautions. A gradual approach is encouraging for the markets. The devil is in the details, and the details are coming. Nick Rees, an analyst at Monex Europe, echoes Ducrozet's sentiments about the importance of specifics. He believes that while blanket tariffs on day one were always unlikely, the possibility of targeted levies being imposed shortly after the inauguration is still very much on the table. Rees points to the memo directing federal agencies to evaluate trade relationships as a significant development. This, he argues, suggests that the Trump administration is serious about identifying and addressing what it perceives as unfair trade practices. The devil is in the detail, and we have no detail, Rees observes, hinting at the uncertainty that continues to grip global markets. He warns that as more specifics emerge about the scope and targets of these investigations, markets may react negatively, especially if those details point towards a more aggressive approach to trade. A sigh of relief, but for how long? Kathleen Brooks, research director at XTB, believes the market's reaction will depend largely on the content of Trump's executive orders. While she acknowledges the possibility of deregulation in sectors like energy and finance, she also notes that the absence of concrete tariff plans suggests an ongoing debate within Trump's team. Meanwhile, Boris Kovacevic, an analyst at Convera, sees the euro's surge against the dollar as a direct response to the tariff delay. He believes this indicates that the market is interpreting the delay as a de-escalation of trade tensions, at least for the time being. This, he says, has sparked a risk-on sentiment, encouraging investors to move away from safe haven assets like the US dollar and into riskier assets like stocks. Navigating the uncertain terrain of trade. So, what does this all mean? Is this the calm before the storm, a brief respite before the trade war drums start pounding again? Or is this a sign that Trump, now faced with the realities of governing, is willing to moderate his stance on trade? Honestly, folks, it's still too early to tell. This delay could be a sign of a more pragmatic approach to trade, one that prioritizes negotiation and diplomacy over economic bluster. Or, it could be a calculated move, a way to buy time and consolidate power before unleashing a wave of protectionist policies. One thing is for sure, the global trade landscape is about to get a whole lot more interesting. Buckle up, folks, it's going to be a bumpy ride. Stay informed, stay engaged. In these uncertain times, one thing is paramount: staying informed. Keep your eyes glued to the news, folks. Follow the trade talks, the market reactions, the expert analysis. Knowledge, as they say, is power, and in the topsy-turvy world of international trade, you're going to need all the power you can get. Don't just sit there passively consuming the news, though. Engage with it. Talk to your friends, your family, that barista who always spells your name wrong. Debate, discuss, dissect the issues. Because at the end of the day, the future of global trade and indeed the global economy depends on an informed and engaged citizenry. So go forth and be informed, my friends. And for the love of all that is holy, stay tuned. Thanks for watching. Don't forget to like, subscribe, and hit the notification bell for more updates.